online travel company saw a record revenue of $3.36 billion in Q2, but it still fell well short of Wall Street estimates. And Diane, we've been talking a lot about earnings and the big beats. On the one hand, it is about this quarter coming in with such low expectations.
Right.
You look at a name like Expedia, it is about expectations being so high because of what we heard on the travel demand. In many ways, that's what's happening with the stock in terms of the big declines we've seen there.
That's right. It certainly fell short. Go ahead, Akiko.
Well, I was going to say there is such a thing as maybe expectations being too high going into it. But when you think about some of the other travel names that have been reporting, analysts expecting a little more from Expedia, certainly not beating the bar, at least with shares down more than 16%.
Especially to your point about what the expectations were for travel. And we've seen such strength there with this experiences play that we've seen with a lot of both the airlines, the cruise lines, and just travel stocks in general. Gross bookings for Expedia did increase, but less than expected. I mean, it rose 9% to $27.3 billion. Analysts were looking for $28.3 billion. Lodgings, it did come in at a record, actually, $19.2 billion. But again, short of what expectations were. And just that question of, is there softness coming when it comes to the travel picture and what that looks like, whether we're talking about airlines or hotels? Another stock that we are watching is shares of Wayfair. That stock finishing the day well in the green on the plus side, up by about 16%. So the flip of what we've seen with regard to Expedia, its results soaring past estimates in the second quarter. Despite seeing active customers fall, the online furniture retailer continues climbing after reporting adjusted earnings per share of 21 cents a share against they were expecting a loss. So it was a surprise gain for Wayfair. I mean, look, you remember this was a pandemic darling, and then it lost its luster and now it's come back. Akiko.
Yeah, this is a company that has really been really moving aggressively to try and slash costs. They've laid off about 10% of their staff, and we're starting to see a bit of a turnaround. Interesting to see how the sentiment has shifted on Wall Street. In recent days, we saw Piper Sandler upgrading the stock to overweight from neutral, raising the price target to $97 from $35 a share. Wells Fargo also upgrading shares to overweight, raising their price target as well to $100. So, it certainly feels like when you look at the home furnishings industry, as we call it, where Wayfair competes, things are starting to stabilize. And we're seeing some of those results with that stock up roughly 16% today. Well, shares of Clorox closing the day up about 9% here following an earnings beat. The company reporting net sales of $2 billion, a 12% growth since last year. Clorox also projecting better than expected guidance for fiscal 2024 as they expect to exceed its pandemic years. And that is saying a lot, Diane, when you think about how Clorox performed during the pandemic. But look, this is a company that raised its prices, that has certainly boosted profits. But, I think it's interesting because even though we're talking about that guidance being optimistic, they also kind of had a cautionary note here saying that consumer demand is robust, but they're seeing economic activity becoming a little more challenging in the months ahead. The CFO saying specifically, we expect it's going to continue being a challenging economic environment, and we continue to expect ongoing cost inflation. So they are still seeing that reflected in their numbers.
They are. However, I mean, it did well. I mean, people are buying the cleaning products and the trash bags. I mean, they make Glad trash bags. So they've had strength there. The filters as well, water filters, cat litter. I mean, this was it. I mean, look, I'm doing a deep dive into their report. Wipes. I mean, I need more wipes. So, Clorox certainly doing well. Wall Street rewarding it with a big thumbs up today.